Hey guys, so in this video, let's take a look at a company called Generation Mining. Off the back, you can see that Generation Mining is a Palladium focused company. So they are in the development stage, and you can see that they have a 4.2 million ounces of Palladium resource. And in addition, they have copper and platinum. So you can see Generation Mining is the largest undeveloped Palladium project in North America. Yeah, so this makes Generation Mining pretty unique, because a lot of the Palladium project, especially the PGM projects, are located in like Africa. So I just wanted to give a quick overview on Palladium. So as you may know, Palladium and platinum is part of the precious metals, and then you can see the price of Palladium. So Palladium right now is trading around 2,300, right? So they are trading higher than gold price, right? Is trading higher than gold. And the reason why Palladium is trading in such a high price is mainly due to like the supply and demand. So right now the main demand for Palladium is in gasoline cars. Basically Palladium are used for catalyst converters for gasoline cars, right? So that it makes the gasoline cars more environmental friendly. It reduces the carbon emission. So what I really wanted to show you guys is their Palladium project. So recently they just released their feasibility study. So based on the feasibility study, it shows that this project has a 13 years mine life, and then it can produce 146,000 ounces of Palladium per year. And in addition, they can produce 36 million pounds of copper and also 41,000 ounces of platinum per year. And then you can see the breakdown numbers by percentage. So 59% is in Palladium, 27% in copper, and 10% in platinum, right? So they do have significant exposure to copper. So you can see their all-in sustaining cost is around $800 per ounce. And basically they can produce 245,000 ounces of Palladium equivalent per year. And then we can see their initial capex for the project is 665 million Canadian dollars. And that gives us the internal rate return of 30% based on 1725 Palladium price and $3.20 copper price. And this translates to NPV of over $1 billion for the project. And then we can see that the project is based on the reserves of 2.3 million ounces of Palladium, 532 million pounds of copper, and 756,000 ounces of platinum. So you can see that this project is in a joint venture with Sibanye-Stillwater, that they own 20% of the project, and Generation Mining owns the 80%. Sibanye actually has a backing right for this project. So basically they have the right to acquire additional 31% of the project by paying 31% of the capex to the joint venture. So basically Sibanye has to pay $206 million in order to increase to 51%. So the end result would be Sibanye will be paying 66% of the total capex, and then Generation Mining will be paying 34% of the total capex. And this is just based on if Sibanye exercise their right. So now the question would be, would Sibanye exercise the right? Personally, I think that Sibanye won't exercise the right, because if we look at right now, Generation Mining's market cap is around 129 million. So if Sibanye really wanted more exposure to this project, then they should just take over this company, right? Because the market cap for Generation Mining is only 129 million. And then they're paying 200 million just for the 31%, right? So might as well just take over the entire company. So now let's take a look at their three main areas that they need to accomplish in order to de-risk the project more. First is permitting, right? So they need get the permit. The biggest risk for development company is permit. And then the second is financing, and then third is construction. Financing, I don't think they have issue of financing the projects. There are different options for them to finance the project. They can do equity financing, or they could do a debt financing. So you can see that their permit is expected to receive in 2022. And for the financing options, you can see that they can start negotiating like this year, 2021, and expected to, to finalize financing after they receive the permit. And then the construction is after the permit is received. There's an 18-month of construction period. If everything goes as planned, they are expected to start production in end of 2023. Okay, now let's take a look at their insider ownership. So you can see that their largest holders in the company is Eric Sprott. He owns about 8.2% of the company. And then their second largest holder is Zebra Holdings that own 8%. So Zebra Holding is part of the London groups of companies, right? So again, a big major player in this space. Another 8% holding is Sibanye Stillwater, which is their joint venture partner. And then Osisko Mining owns 4%. And then management and directors of the company owns about 6.7%. And then lastly, I just want to reiterate the investment thesis for this company. So you have to be bullish in Palladium. So basically, in order to be bullish in Palladium, you have to be bullish on the gasoline cars, right? At least for the short to midterm, right? And then the second reason would be potential takeover target. So since as I showed you guys earlier that Generation Mining is trading pretty cheap, even though the stock price went up a lot. And also especially they have pretty strong insider ownership, such as Eric Sprott and Zebra Holdings. They both are huge players in the mining sector.